All right, traders, here we are, episode 4, risk management and common pitfalls. I really like this episode. It's one that's not a sexy conversation, but again, this is the most important piece of the puzzle. We need our edge to trade, but risk management is really what protects our trading. It preserves the capital. And then after that, we got to have the consistency, which is going to compound it. But without risk management, there is nothing. There's an old saying that goes like this. It says, don't eat like a bird and poop like a rhino. So we don't want our equity curve to be like, eat good, eat, little worms, little wormies, and then on down because of poor risk management. And there's a lot of reasons why we may have poor risk management. We're going to dive into it. Mr. Josh, what do you think about risk management?
If you don't have it, there goes your account. We literally talked about this earlier on the live stream. It's very, very key. If so many traders get into their trades and never set a stop loss, nor even know what it could be, and that's just that. So you're setting yourself off right there out of the get-go on a bad foot note, right? So yeah, risk management is going to be the key. One of the keys to keeping your longevity in the stock market and you becoming a stock trader for sure.
Absolutely. I mean, without risk management, there's nothing. And you don't hear many gurus talking about it because that's not what's marketable. It's not marketable to get people in your chat room. Like,
it's all about profits.
You're not going to get many signups if you're like, we teach the best risk management over here. It's not exciting. It's not what people want to hear. Yeah. But I'll tell you, it's what Josh said gives you the longevity. The best, what's the saying, Mr. Josh? It's like the best offense is defense. Yeah. I can attest to that. With this funded account I just did, it was the defense. It was only the defense. After an extended period of time trading, and we say experience is your best teacher, Josh and I know the setups. We know the setups. Nothing is surprising us at this point as far as the setups go. Well, we've seen it all, but what we have to protect is we got to have the good defense. Make sure you have the best defense out there, and there's a few ways of doing that. I personally, Josh, set hard stops. I know there's a lot of different opinions on that, but I personally set hard stops to protect myself from myself because sometimes I do like a trade a lot. I love the setup. It's a beautiful trade. I get over convicted and then oversized. And then when you're oversized, that's the emotional dial. You start having bias. Then when you have bias, you blow up. Then that's the end. That's the end of it.
Yep. 100%. And then back to that, I just thought, of course, I've been talking about this a lot recently. And of course, now it's funny how this lands into how much I've been talking about it recently, but lands into this risk management lesson was, my boy, let's not throw names out. But one of my traders I worked out with one of my traders I did one-on-ones with, had him on a groove, 22 wins in a row. I mean, for any trader, that's remarkable. To imagine if you just started or if you've been trading for 20 years, that's great, 22 wins in a row. So I have a one-on-one with him. I always talk about, and of course I have my Michael Jordan right above me. I love Michael Jordan. So 23 is up next. Have a one-on-one anyway. The next day I get a message, hey, did it? I did it. I'm like, I think that's what the text is because you can't really read emotion in text, right? And unfortunately, I did it. I said, yeah, you did it, Michael Jordan, number 23 wins in a row. No, he went for another trade in what it could have been a 23rd win in a row, or it could have just been a small loss. No, that 23rd, what could have been win in a row was a loss and took out all 22 wins. There you go. You have 22 wins in a row, but one loss can take out 22 wins. Very poor, very bad risk management.
Absolutely. I've seen it, Josh. People with 90% consistency rate, they do so well. They're great traders, but then this one trade comes along and one misstep can completely make you lose it all. Again, risk management is everything. Trading is not about winning every trade. It's about survival and consistency. Honestly, Josh, the greatest enemy of traders having a good strategy is their dream of this perfect strategy out there. They don't understand that losing is part of it. Now, large losses don't have to be part of it, but losing is part of it. I like the Michael Jordan reference he brought up. One of his great quotes is, the only reason he really wins is because he loses. He did not get those championship wins without losses along the way. There's no way to avoid them. But what you can't avoid are large losses. Yeah, it happens. This happened to me. I'd go 23 wins and then let one trade. You start feeling like Superman. Like, I can't lose. Again, I mean, that's what creeps up on you when you just can't lose on trades. You just have a cushion now and you start sizing in. There's some traders, Josh, this is a very interesting approach. Like let's say they have a 25,000 account. They'll make a few thousand, withdraw back down to the 25, make a if you withdraw. And the reason they do that, or even on like a small account, the reason they do that is because they never want to feel like they have all this extra cushion that they can risk.
I actually did that with my first account I had. That little $2,000-$3,000 account I had. Every time I talked about that, I had to live off of it. It was one of the main reasons why, is just, you just slowly but surely grow your gains, and you get up a little bit and take some gains back, grow up a little bit, take some gains back. So you stay in that same mentality of, well, I'm still at this account size, right? I'm not going to grow it. And then, oh yeah, no. And so you don't get that inevitable feeling of I am Thanos or anything. You go, yeah, I'm a humble, grounded trader, and I want to stay that way. But a lot don't. A lot of traders do not want that, unfortunately. They want that, like we talk about, the quick cash grab. It's my money, I need it now. Type of JG Wentworth, commercial of they want it all right now, and it's not coming to you all right now. You got to have some discipline, the survival and consistency. And back to my boy Matt, I talked about this, and it's kind of big now that I've been talking about it recently, because of course, yeah, you think about it, but I love it as a saying that he talks about quite a bit, and now that I'll start saying quite a bit is this. Usually you have 5 trades. You have big losses, small losses, break evens, small wins, big win. You can get rid of the big losses over here, and you just stick with usually it's gonna be small losses, break evens, and small wins. But if you can stick with that, and you're just have the large wins here and there, those little home runs that come in, you eliminate the large losses, you're gonna be talking about that longevity. You'll be doing this for a lot longer, and most likely forever. But traders, they just cannot escape that large loss. Comes back to risk management.
Marrying the ticker. And the positive is proven that you are seeing an edge and you are trading it well. We need to eliminate, like you said, the large losses though, but outside of that, you're a good trader. You're seeing things well. We just need to work on the edge. There's a lot to it. It's not just like the wins. It's additionally, how are you handling the losses as well? So we're going to go over core risk management principles. There's a few different things that we can work on as far as these principles go. There's a lot here. For instance, position sizing as far as risk management goes, and redefining the risk. Like I said, I take hard stops. I do hard stops because ultimately I like to be in a few different trades anyways. So I may work 4 or 5 out of the gates, set the hard stop so I don't have to focus in too much attention on them. When I'm in a few different setups that I like in the mornings, that helps me from being over biased on them anyways, like tunneling into this one trade has to work. That's an important part for me as far as my risk management goes. I like to spread out the risk a little bit on a few different hands that I see have an edge, and some may not work and some may work very well. And so I'm able to see, okay, this is not working, take it off or leave it or adjust the stop, or the ones that are working, maybe I can leverage size into them, reduce the risk. You're able to size them even dynamically. That's risk management. Sizing's a huge part of that. What are your thoughts on position sizing, Josh?
Big time. I mean, you got to worry about what size you're going to deal with first off when you start trading. A lot of traders want to go again back to that it's my money, I need it now, and went 1,000, 2,000, thousands of shares, as big as they can go. Let's go max account. That's going to blow the account. Let's just worry about being consistent at first and finding something that you can rinse and repeat with. Another thing we talk about, without that emotional distress that you would go through, the emotional roller coaster, mental Olympics, I've heard even called before. You don't want that. You don't want to go at the end of the day and you're just like, oh, wow, I got back to break even, or oh, I made this much, or barely got back to $50 loss, and your armpits are just swamped sweaty, or just it's been a long day. No, I want to be in a trade and understand when I'm in a trade, I can just relax in it. Like anything I've ever done in life, I go get water, I go to the bathroom, I go to sleep. Any normal thing you do, I want that to be like trading. I don't really have much thought process. I break it down, I analyze it, I have the information, and I trade the information. So sizing's key. Don't worry about the huge sizing at first. Go 100 shares, go 10 shares, go 20 shares. Find something that you don't have that emotional roller coaster. Stay in the trade. And for me, I'm a little different. I like, for at least my stop loss, I know I'm definitely different when it comes to that. Most traders 100% early on need to have a physical hard stop in. You have to have a stop in. You will not stick to it otherwise. I took a large loss early on by holding and hoping and said, nope, that you are not ever going to do that again. You're going to stick to your stop loss. I'm a mental stop loss trader. I find an area, I stick to it. And I define that over the years really well with the main thing with my target. So once I have my entry price, I already have predetermined target area and stop loss area, knowing that my entry, especially if it's a predetermined entry, like you're trying to short reversals at high of day, you're trying to take bounce plays. Well, you know where your entry is most likely going to come or be at when you get filled. So you need to already form, where's my target? And generally speaking, what I do is once I have my entry price, I know it's a well-determined area, whatever it is, $8. We'll just say I'm in at $8 for a bounce play. Well, my target we'll just say is $8.50. Well, I divide that by 2. Pretty simple. It's 25 cents. I go down 25 cents in the chart, find something, whether it was a 200, it's a moving average, it's the VWAP, it's old resistance that could be new support. It was old support from before. It's something on past chart history. There's something there around that 25 cent corridor that should keep me in this long bounce trade. And that's where I keep my stop loss. And
a few important things that you mentioned there. I like that you're predefining these levels, your entry and your exit. I mean, how important is that? Before you ever enter trades, do you know exactly where I'm getting in, where I'm getting out, like targets, all of that?
Again, going back to how we all go through the mental Olympics early on, I, of course, was one of them. And it was just a parade of emotions I did not want to go through every day. So I found out if I could just find where my target was and stop loss was ahead of time, I'm like I said, I was like, hey, when I go get water, anything I did, I know exactly. I now have essentially a set borders. I have a guideline, I have rules to stick to. And once I started sticking to those rules more and more and more, and I did, at first I wouldn't always stick to my target. I always wouldn't stick to the stop loss. But the more I would understand to go back and journal and track the trade, and if I honored my stop loss like I should have, wow, I would have lost a lot less. Wow, if I would have honored that target and not wanted more, I would have made money. And so once I started to realize, just stick to your rules you give before you ever really enter the trade, it makes my trades, and it will make your trades a lot simpler and easier.
Yeah, I see something a lot of newer traders do, which is adjust the risk mid-trade. They're focused like profits. They're not focused on the stop at all. It's just they get it. And then they blame the market, this trade not working out. What does risk say, traders? Risk says more things can happen than will happen. That's pretty much the definition of risk. So you got to eliminate expectations. That's visual representation of what you think the market's going to do. When you put a quarter in a slot machine and it doesn't pan out, are you mad at the slot machine that it didn't work out? I mean, maybe some. The markets, you got to treat it the same way. You're going to involve yourself in the risk. The stock market's different, obviously, in that we get to see the pattern presented before we put our risk, the money on the table. It's different with slots. But the thing is, with trading, that same principle applies. There's risk involved with every single trade. Some people, Josh, they think, I'm a risk taker because I trade. But they really don't understand the definition of risk, that more things can happen than will happen. You got to understand that. When you can just eliminate the expectations and your reaction regardless of what the market does. If it doesn't act in your favor, the market's just printing information. It's printing information. If it doesn't act in your favor, you get upset. It's because you had expectations. When you can eliminate those expectations, it's going to have just a great implication on your account. Yes, Josh and I have seen the setups. We've seen the patterns. We know to apply the risk. Otherwise, you're never putting yourself, in the position to reap the favorable outcome of that trade. But we know ultimately that our reaction is the most important to what the market is going to do. So when Josh is involving himself, like let's say in a trade that's getting momentum and he's taking the long there, he's told me before his stop is essentially his entry price. Like if he's looking for this continuation on the breakout of a play, his stop is his entry price because he's looking for continuation. If it fails that, he's not going to say, well, geez, I can get a better average on this now. Let me size into it here. Big difference between adding to a trade and scaling. By the way, scaling, that's a part of your predefined plan. I do that sometimes. If a trade's trickling up to a euphoric move up towards resistance, sometimes I start them a little early and scale. That's part of the plan. Now, obviously, if it's not part of the plan and you're just add, it'll work eventually.
This will be the high. This will be the high. This will be the high.
That's where you can get in trouble. And I've certainly been the recipient of that trouble in times past when I'm trying to force what I want on the market versus just knowing my reaction. If this trade's not working out, again, risk says more things can happen than will happen. Just take it off or stick to the stop that I've already predefined anyways. But I hope you guys are understanding. A lot of this is predefined. We're not getting in and hoping. We know our entry, our exit on both sides of the coin. One thing, again, too, that helps me out as far as the risk-reward ratio, that's part of the core risk management principles. What's your risk-reward? It's good to be mindful of that before you get into a trade. Okay, if I get in here, what's the risk and reward? If it's 1-to-1, essentially, I'm risking a point to make a point. It's 1-to-1. You have like a higher than 50% win rate. Yeah, you can make that work. But one thing for me that helps, this is all in that risk management category, is leaving leftovers. And actually, somebody in chat said that was working for them today. They said, thank you for discussing leftover positions. That's leaving 20, 30, 40% of your position to work for you so you can up that risk reward ratio.
Right, 100%. Back to your analogy earlier about in which hardly anyone, which unless they've had a few drinks when they're at the casino, I don't see anyone. Yeah, you go to the slots or whatever gaming machines now and put money in, and they don't get mad. They're not banging and hitting the machine, right? You just kind of you kind of expect it. My other analogy on the other side of that, besides losing money, would be winning money. And if I'm on the street walking, I have even people in chat that are on my Discord that are going, man, thank you for that analogy. I'm using the Josh analogy analogy of if someone hands me $100 when I'm walking down the street, I'm looking at my, you know, like I've told you, like if I'm walking down the street, someone hands me $100 and I'm me and Avery walking down the street, you know, me and Kevin here walking down the street, and someone hands us both $100. We're not going to look at the guy and go, hey, give me 200 more, buddy. No, we're going to go, there's my $100. Whoa, you know, like almost in the stock market, right? You get your profit taken here, you take the money. You don't get greedy and want more. Same thing. Someone's walking down the road and hands you $100, $20, whatever it is. You're not going to say, hey, that's all you got for me? I mean, if someone hands me $1 bill, I'm still going to be like, sweet, someone just handed me money. I don't know why, but I've got money today. I'm not going to ask for more. And you have to understand that same analogy. So same for the risk management, you know, understanding your stop is key. Same with where you're going to take profit for sure.
Absolutely. So the next part of the core risk management principles is max daily loss rule. And for this, you can actually contact your broker, and you should, and most traders that I know have, to protect ourselves from ourselves. Now, trade the pool is a beautiful thing because we have a max drawdown on the day. Which for me on the max 25K, I have a $250 max drawdown, which honestly has been a great thing for me. If there are just a few days out of the month that I'm on tilt mode and not trading well, and I want to keep trading because I'm a trader and, you know, I want to keep pressing buttons, that's there to protect me from myself, because there are times I have a human nature like everybody. So I have a tendency to make mistakes too. There are times where it's like you have to just step away. And I'm so thankful for that. It really protects us from ourselves. You know, a few different tickers, for instance, that QMMM that went from $10 to $300 protected me there. So I traded that on the max and got wrecked on it, but only wrecked for the profit on the day plus the 250. So it was there to protect. I haven't heard anybody, gee, I wish that wasn't there, because some people buy out of that drawdown and then they're still on tilt mode and lose more, but it's there to protect you. And it certainly has. Like Josh, it's been at the forefront of my mind here a lot lately. That is, times past, like I would get aggressive on recovery days and I would take my foot off the gas on green days. Isn't that so backwards? Yeah. It's like when I'm red, I'm more hopeful. And so I trade that way. I'm red, I'm hopeful. And then when I'm green, I'm scared about giving green back. And so then I take my foot off, you know, the accelerator. So we got to understand what the psychology behind this. Our mind has to be stronger than the emotions. You just got to understand yourself, these things. I'm like, yes, that is backwards. I need to get aggressive on the green days, not just try to dig myself aggressively out of a hole. And then I just dig my way deeper and deeper.
Kind of like Mitch always talks about putting that gas pedal down when you have that. When it takes a while to get to that feeling of, oh, I know what I'm doing now. Let's put the gas pedal down on my green days. Because most traders at first, it's the opposite. They want to put the gas pedal down on red days and break on green days. Killing it. But that really goes back to max daily loss. Goes back to the first part of that last segment, which is sizing. If you don't go too big, you won't get too wrecked. So make sure your sizing is very, you have that in check for sure.
Yeah, there are many different common pitfalls that we see that traders fall into, especially when they first start out. There's a few here: over trading, sizing up too fast, ignoring stops, whether mental or hard, and really just ultimately no plan. So over trading is a huge one. When traders have the freedom to finally trade as much as they want to out of that PDT roll, it's almost like you've been trapped for so long. It's like, maybe imagine like an animal that's just been in a cage for so long, and then you're finally free and you're just chasing everything you see out there. Yeah. It's like, oh, bunny, squirrel, butterfly. You just, everything you see you want, and you're just over trading, and then you revenge trade and you're sizing things. You size when you're red instead of just having consistent sizing, which is going to equal consistent results. It's bad. It can be very bad, that freedom without discipline.
Freedom. Now that song's made. So yes, no, all those are just exactly 100% are usually some of the bigger killers early on was over trading 100%. A lot of that comes just to simple stuff like, oh, it's breaking out now. Like, again, like we were talking about momentum plays where my stop is my entry, where early on, it's okay, it's breaking out now. Okay, no. Okay, add to it. Okay, no, it's not breaking out. Okay, let's get out of it. Okay. Oh, now it's breaking out. Now it's going. And next thing you know, you traded it 10 times because you keep wanting that breakout. Like you're saying, you're trying to predetermine this play that you don't even know it's going to happen, but you think you do. And you take 10, 15 trades in about a 5-10 minute period, and you've lost half of, not more of them, and you're down $300-$400, and you're like, whoa, what did I just do? Oh my goshos. So the over trading, however it comes in, is huge at first. Sizing up too fast, I don't know how many, like just going back to that is obviously I just led off the last segment saying sizing is huge because I have so many traders that want to go immediately after a short amount of period, which to them is a long period because they haven't been doing this for a while, but they'll say one, maybe up to max 3 months is usually what I see. And they'll be 1 to 3 months in and they'll be, I'm gonna go to this big size. I'm gonna go from 1 to 500. I'm gonna go to 500 to 2,000 shares, and I'll see that doing the one-on-ones. I know you've seen this throughout the years too, where Oh, but I was good for a month straight doing 100 shares. Why is 500? Like, you went from 100 to 500. You should have went from like 100 to 150 or 100 to maybe 200 at most. Because you got to think, what's 100 times 2? That's a huge move. That's a big. If you think about going from 50 shares to 100 shares, if you talk about a stock that goes from 50 to 100, that's a pretty big move in your head, isn't it? If you see a stock go from 100 to 200, don't you go, that's a big move, you know? And so that's a huge move. And so sizing is huge and sizing up too fast. Again, the JG Wentworth, it's my money, I need it now. Ignoring stops, I mean, huge. We just talked about that, of course, as well. If you don't have a predetermined stop loss set in, or then ignore the stop, and you like even Kevin said, how many traders readjust the plan mid-plane? Again, we don't go to the huddle as Tom Brady and, okay, we got the plan, here's our plan, and then when we show up at the line of scrimmage and it's actually you. Yeah, that's not what we want, because that's what happens. We're not going to then, because that's what usually typically traders do. They have a plan, get to the huddle, now they're in the trade down set HUD, and oh my gosh, I'm readjusting everything. What do I? And the emotions start going in. So that's why I like Kevin saying, I like having a predetermined target and stop loss, because it helps me stay focused in on the trade. And then back to that, if you have no plan, I always say create a plan and stick to it. And that goes back to everything we just said, or I essentially just said, you know, that finishes that out in this segment for me, is create a plan, team, and stick to it.
Yeah, I love your sizing, your input there. As far as the sizing goes, I used to have this saying, which pulling back on it a little bit, I used to say, hey, if you're consistent with 100 shares, all you got to do, throw an extra 0 on there and you're making more money. I still like the saying, but I do agree with you. Like, don't go from 100 to 1,000. Yeah, go from like 100 to maybe 2, 3. I like what you're saying there. Yeah, it can be too heavy, but still, I mean, if you're making 10,000, you can make 100,000. Just add a 0.
Yeah. Or you can lose that much for sure. So
Yeah.
know that.
Or you can lose it all in one trade. Absolutely. The last bit here, guys, practical tips to help you stay disciplined with your trading. What do you think about daily loss stops on the account?
Yeah, I mean, that's huge. I mean, I think that's nice to have. I mean, of course, earlier on the live stream, the trader said he has $100 every day, and that's it.
Yeah.
If he loses it, if he gains on it, great. If he loses it, it's 100. That's it. He doesn't want to lose more than that. You got to have that early on. Mine earlier for myself, of course, I never really had a daily set stop because I was going so small. I was like, there's no way I'll lose this much. And of course, how my predetermined stop losses were in, I usually had about a 3 R to R risk to reward ratio, which was really good, 3 to 1, which was really nice. So but you have to have that. You've got to put these bumpers up like it's bowling. You've got to put these rules and these guidelines in before you ever start trading, because if you don't, your emotional side will kick in and you immediately start doing things you never thought you would do once that trade is actually happening in front of your eyes, that you're actually currently in it. And so if you don't start, again, what you're seeing there, journal your trades. Gosh, team, I can't tell you how important that is, because if you actually journal and take it really seriously, I mean, if you want to do this forever, you've got to nerd out and geek out on it. And I did, and I still do to this day. I mean, I'll go over when I'm going over trades with traders, and I'll break down plays, and I'll look at lines and how this line, then it's support one day and then it becomes resistance, and the next day now we're bouncing on it again, and I'm like, wow, look how that line, and I'm nerding out because that line was resistance, then it was support, now it's resistance again. Oh my God, look how this line is up. And I would get nerded out. I'd freak out, and I kept doing that with chart after chart after chart. I would break down not only my trades, but I'd break down all these other charts and trades that I could have had that I didn't have. That's where you have to get to. And so if you do that, again, you're gonna see, have a pre-market plan and stick to it. I mean, who just said that? Have it, create a plan and stick to it. That's why me and Kevin are talking about this stuff. Set hard stops. You got to have a stop in and set it in. Very few and far between will be able to stick to a middle stop. So again, if you, like I said, create a plan and stick to it before you ever really are in that trade, a profit taking area. You should know a predetermined stop loss. You set your bumpers, your guidelines, your rules in and stick to them. You won't ever usually have to worry about because I'm sure Kevin can tell you, like myself, how many times if I even say I don't want to lose more than, say right now, I don't want to lose more than $500 in a day. Let me tell you something, 95%, 97% of the days I'll never even see that because of my predetermined risk to reward ratio. So Kevin, again, yeah, he lost QM's 250. Thank gosh he had this daily stop loss from trade the pool. That's QM's. It ran $300 in one day. Get my point. That's a bigger mover. How often does Kevin have to see a daily stop hit? Probably not often, because he has a good R to R risk reward ratio.
Yeah, and that one could easily blew accounts, right? Easily blew accounts. Right. It took me out from 100 to 130 or something just immediately, and it blew up tons of accounts without any risk in place. And that only only has to happen once. That's why we're making such a point here, traders. Like, you could be a good trader, but it's just that one time, just that one trade, and it's all gone. Poof. But it really does piggyback off what you're saying, Josh. Having that plan goes, it eliminates so many of really the nerves if you already just predefine it all. I know I'm losing $50 or making $100 on this trade. It eliminates a lot of the need to just be so tunneled in and glued and nervous and sweating when you have that plan. So do it for you. Do it for you guys out there. Just set your plan, stick to it. Don't adjust it mid-trade. It's just like adjusting that stop. Oh, moving it.
Maybe this. Yeah. And the thing is just huge about, I know at first you're still going to go through nerves 100%. There's no ifs, ands, or buts about it. Even when you have a predetermined tools, you have a plan, you know, I'm going to lose 50, I'm going to lose 100, or I'm going to make 100, whatever it is. You know, make this much, lose this much. My point is you're going to lose. Understand you're going to lose. So when you get that stop loss and it hits at $50, tell yourself that. Be okay with it. It's much better to lose 50 then the next thing you know, you're holding and hoping and it's 500.
Yeah, absolutely. Risk management, guys, it's not optional. It's not optional. It's survival. It's very important. You have to have an edge. You have to have the discipline to take that edge over and over. You have to have risk management to protect yourself, and the consistency, of course, then to compound it. But embrace it. I say it every day. Embrace the risk, accept the results. Truly accept the results. Don't just say that, oh, I'm a risk taker, I'm a day trader. No, you got to truly understand more things can happen in this market than will happen. You can have positive EV, but that still doesn't mean like I've got this magic crystal ball. I know exactly what's going to happen on these individual trades. When you think more over a series of trades instead of individual, and you think in terms of repetition played out through your edge over time, there is a positive EV there, but we got to eliminate thinking on this one trade, I need it to work and I need it now. And if it doesn't, account is gone. So focus, guys. Focus in on your edge, on your system, on good risk management. Back test, journal. Josh is big on journaling for a reason. It certainly helps out traders, but it's key. It's key to survival. The best offense is ultimately going to be defense. Last word over to you, Mr. Josh.
I think I got the J.G. Wentworth commercial stuck in your head. It's my trade. I need it now. You just said. Yeah, but that's what, and you're all over it. And like I said earlier in this one, of course, I think I said that in the live earlier too on Trade the Pool. You want to have longevity in this. Do exactly what we're telling you, right? We're telling you the guidelines. This is exactly why we're doing this mini part series. We're pretty much saying the same thing, maybe in different verbiage back and forth, you know. And then you're going to hear it from Money Mitch. You're going to hear it from Michael Nosh. You're going to hear it from a lot of other great traders here on Trade the Pool. And then not only here, then you're going to flip over to that channel and that trader and this other great trader. And you're going, wow, hey, Warren Buffett even said that. Whoever just said that, right? John Bolin. You're like, wow, they're all rinsing, repeating, and saying the same thing, right? So if you hear that we're saying the same things over and over and over, tracking and journaling, make sure you have a hard stop, blah, 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 blah. There's a reason to what we're saying overall. So make sure, and especially in this one, if you want survival and longevity in this game and not have those big losses, right? And you can have the small losses, the break evens, the small losses, or the small wins and the big wins. Just get rid of the thumb, essentially. Cut the thumb off. And you will be you'll have longevity and survival in this game,
right?
For sure.
Josh and I can lay out the blueprint, guys, but we each individually have to build the house off of that. So as we always say, traders, take the trades, embrace the risk, and accept the results. We will see you guys in the next episode.